Today, I'm going to be talking about midterm election years and the historical performance of those years. And one of the reasons for this is that a lot of clients and the general public are a little concerned with what's going on in the markets year to date, and then also moving forward, what's going to happen. I mean, we've still got a lot of political unrest, and we still have lots of global issues going on. The Fed is going to continue to raise rates, it seems, for at least a few more iterations, a couple more. So looking at just the data though, historical data, which again, is historical performance is not indicative or a guarantee of future performance. So just throw that out there, but check out this LPL Research. So LPL, obviously the broker dealer that I'm choosing to work with. Their blog on October 5th was about the midterm year seasonality swings, which are typically favorable for markets, or for stocks anyway. So if you wanted to find this blog, I'll post the link in the notes for the video, but I'm going to blow this up a little bit and try and keep my picture out of there as much as possible. So I'll just look at a couple of the charts here. So October in a midterm year has been the strongest month for stocks historically. This is going back to 1950, as you can see down here, the source. So that's one of the charts, and it's pretty clear, so I'm not going to spend much time. Again, you can go and look at this information if you'd like. And then this other one is stocks have always gained a year after midterms, no matter who's in office. So this is really focusing on the markets don't really care about who or what your political affiliations are. And I know a lot of clients have had some sort of concern about who wins what, or how many House seats, or what the overall government looks like, whether it's red or blue or whatnot. I'm just telling you, it could be pink. It doesn't matter. The markets do not care what the political landscape is. What I believe the markets care about is the lack of understanding what's going to happen in the future. So just the unknown. So once the election is over, then the markets typically settle down a bit. And I'm going to share another thing. Sorry, I have to drag it over, open up in a secure link. So this is actually U.S. Bank, U.S. Wealth Management, how midterm elections affect the stock market. Again, I'll share the link in the notes so you can have all the information, including disclaimers, etc. But if we just look at this real quick, I'm going to break out the House and Senate seats are here right after what type of party they are. And then the biggest and middle column here is before the midterm, the S&P 500 performance from basically 1 year prior to the month of the current midterm. Then the next column here is the midterm election month until 1 quarter following. So for that full quarter, including the midterm election month. Then the next column is 6 months from the midterm election month. So we're coming up on November 1st. It would be then until April 30th of next year, 2023. Obviously, these are not predictive, but I'm just saying that that's what kind of to have a frame of reference. And then this last one is a full 12 months. So if we scroll down, you can see these numbers. I'm not going to spend too much time on the earlier ones, but 2018 was a little bit different. We had a 20% kind of tank at the end of the year where the markets went down. And so you can see that prior to, the market had actually performed pretty well. And even including that, the market was just slightly down. It was down about 6% in 2018. So you can see that the market really did pretty well until that October month, really. And then you can see that it ended the year not so great, where the last quarter, including the month of January, which it rebounded pretty significantly in January, was down just slightly. But then you can see 6 months following that election month, the start of that month, because obviously the elections are a few days into November typically, the markets were up 8.6, and then the full year after was 12. And if you look back at 2014, it was kind of more similar to this 2018 example as well, where the markets that following quarter did not perform well. But then again, 6 months after they were positive and 12 months after they were positive. And then obviously with Biden, this most recent president, which we don't have information on currently, because it's still we're waiting for that. You can see that the markets have been down pretty bad. These are numbers that you can't even see on the rest of the screen. We'd have to go where there's only one other instance, which is Ford and Nixon there. But obviously, we don't know what's going to happen. There's no guarantees. But if you look at the midterm year average, the markets leading up to the midterm election are down on average, typically, historically speaking. And this information, actually, just to quickly point out, is from October 31st, 1961. So it was looking at that November 61 election forward. And so if you look at this, 1% down, it historically has been the next quarter is up 7.3%. The full 6 months is 15, and then the full year is 16. The non-midterm year elections, it's almost flip-flopped here. I mean, where this number is so dramatic versus these other numbers are pretty muted, really. So again, just wanted to give you some information related to midterm election years. I know that it is concerning. Again, we've had a lot of other issues that are still outstanding regarding global issues, what's happening with monetary policy and the Fed tightening, et cetera. But if you have any questions, feel free to reach out. I'd be more than happy to kind of run through some of this information. Again, you'll find the links in the show, video notes as well. So hopefully this gave you some insight, and I don't know if it'll quell much concern. Again, there is no guarantee, but this is the data that I use when I'm trying to help out my clients. So stay vigilant and do something smart with your money. Thank you.